22nd of February 2022. I just wanted to record another video. This one's specifically on semiconductors. Plenty of my previous videos I was bleating on about how semis look good. I've got some options positions there, and then that was all good and damage wasn't too bad as the market was rolling over. Well, just going through my numbers. Well, I manage a few different accounts and I've got some different portfolio allocations in different accounts. However, overall, those semiconductors have been at least 50% of the reason for pullbacks I've had since we peaked in November. So one account, for example, I'm down 6% since November versus what's now 18% for the Nasdaq. And yeah, I keep patting myself on the back, thinking it's doing really well. But you know, truth be told, is I could have done that better. If I was down much less than that, or even up, would be obviously much better again. So yeah, I don't think I've got a whole lot of reason to be gloating. I think it was some drawdown inevitable with those semi positions, but probably not to the extent that it's caused me. So yeah, I just wanted to go through those in detail. So the first point I'm noting to myself is I was cautious on the market. I was sort of putting into an amber phase last year. So like the easy money's gone from that sort of October low. So I knew the market was telling me to get a bit more cautious, which I was outside of the semis. I was selling my positions in the go-go stocks like Shopify and C. That was absolutely the correct thing to do. But I kept adding to the options semi positions because okay, so there's two reasons I was doing that. The charts were, I thought at the time, were actually looking pretty good, and B, I was actually falling for the narrative a little bit. I was starting to believe my BS that you talk to people who are buying a Toyota Land Cruiser and there's a 4-year waiting list, and most that's due to semiconductor shortages, and that sort of on the street stuff is all very well and good, but yeah, if I've learnt anything over the last 12 months in particular, it's really I've developed a good eye for the charts, just to really sort of let that guide me. So even though the fundamentals might be extremely rosy, if the charts are saying something different, it's time to take a step back. So yeah, so like I say, the Nasdaq in particular was starting to give me some amber warning signs. I ignored that when it came to the semis. Well, sort of semi-ignored though, I should say. And yeah, just bought some new positions. And even though sort of overall the market was starting to say, get a little bit cautious. Sorry. The other sort of thing I've done, I've got a sort of few concluding remarks. I'm sort of going through some of them now. I'll go through the rest after I go through these examples. Is I was allocating capital based on the assumption that I could lose my my position on those options. So again, depending on the account, it was either a 0.5% to 1% position size. Now, where I've sort of gone a bit wrong there, I've added so AMAT, MRVL, MU, 3 new option positions on top of the 2 existing ones that I had. So of course, if you add all those together, the position size is starting to add up a little bit. So I gave myself overall probably too much exposure to a sector there. So the specific trades, okay, so I had a trade in AMD. I've been through this before, so I actually made actually a lot of money on a previous options trade. Sold that out and put the money in the bank, and with some of the profits, actually not all the profits, bought new options positions. Those new option positions have been pretty much smoked as AMD has sort of rolled over. Same again with AMBA. Made good money on previous trade. Kept sold that. Put the money back in the bank. Use the profits to reinvest into more options. So okay, so there's 2 things that come from that doing what I did has saved me from a bigger loss. Had I just kept those original options positions, they would have really been hurting me now. So at least it took some money off the table. And the other one, the other conclusion and the observation there was getting into the mindset of gambling with house money. So I made sort of X dollars and think, well, I can afford just to reinvest that. Now that's a mistake because, it's my money, not the house's money, and just because there's no correlation or link between trade A and trade B. So I should have just looked at it with a fresh set of eyes and thinking, okay, should I be doing this trade regardless of where that cash came from? So yeah. Now I added new trades late last year. I added three ones. AMAT. I added it here. This looks particularly stupid in hindsight. You can see I was just getting a bit excited by sort of breaking out there, sort of basing here. Thought it was sort of pushing out to new highs here. Well, it was. And I thought, right, it's ready to go again. Bigger earnings sort of an announcement here. I think in isolation that's not such a bad trade, but again the market was starting to have a bit of a sniff about it. And one thing I should have been a bit more aware of is this is on the weekly chart of AMAT. The RSI was starting to sort of roll over. So if we just take a step back a bit, it's back in November 20, it was only $66, and it's sort of gone on to, gone up by not quite 2x, but 1.5x since then. So it's had a huge run. Even though it's sort of based here, it's sort of tried to push out of this new base and sort of failed. This really falls into that category of sort of last gasp, sort of breakaway gaps that I've seen on some of the trades like DocuSign I've been through in a previous video. So I think I was actually just playing with fire a little bit here. Okay, the next one was Marvel. This one looks even more stupid. Bought it here, earnings breakaway gap, held it. Thought, right, it's ready to go again. Now, again, what I should have done is just it's had a sort of huge run here. I wasn't buying it out of a base like I should have been, and this is sort of like more of an exhaustion gap rather than a breakaway gap. And it didn't really recognize it, so pretty much managed to buy at the top there. Also looks like it's just a bullishness on semis. It's just getting to my head there. And Micron. This one's not so bad. This is the Nancy Pelosi one. She was also buying calls on it. Bit of a cup with handle. Actually, not totally unhappy with this trade. Might have been better if it was could have definitely stayed above all-time highs here. Yeah, I'm actually not sort of too unhappy with this trade in isolation. It's actually held up pretty well despite the sort of big market sell. So it's actually a very strong stock at the moment. If I'd made that trade sort of by itself, I wouldn't be kicking myself. Where I am kicking myself is I was just adding more and more exposure into semis. So I had the AMD, had the AMBA. I should also say one account had the Simo trade, which I've done a specific video on, but I left Simo out of this video. So yeah, if you want to just come back to those conclusions I started touching on, it wasn't a bad idea to what I did with AMD and AMBA, which was to take out profits out of the existing trade and to reinvest that. However, I shouldn't have just taken the house money and sort of gambled with it like I did. I should have just taken a step against and go, what's the actual sort of fresh set of eyes here, new trade. Maybe I still would have done the trade, but just allocated a bit smaller amount to that. For example, I've just written down on my notes here, with AMD in one account, I made it 5% on the overall portfolio, so it's a good trade. And I took the profits out of that and then reinvested 3% of the account back into more AMD options, and those ones have been smoked. They're down 60-something%, so they've sort of cost me a couple of percent in the portfolio. Like I say, Micron, not unhappy with. Marvel and AMAT were a reach. Definitely Marvel. Want to look at that. That's just buying. I really want to be buying just coming out of a proper consolidation period. There's no real consolidation period there. I was asking for trouble there. And overall, I was just adding more exposure into semis, into a top-end market because I was believing the narrative about semis being in such short supply, whilst at the same time adding unnecessary risk to the portfolio and taking on unnecessary exposure.